The Iran peace talks just collapsed. Trump announced a naval blockade. Oil jumped 8% overnight. Futures are down. Here is what actually happened and what it means for your money this week. US and Iranian negotiators met face to face in Pakistan over the weekend. They ended without a deal. The core issue: the US needed Iran to commit to giving up its nuclear weapons program. Iran would not, and within hours, Trump posted on Truth Social that the US Navy would begin blockading ships tied to Iranian ports. An important distinction: this is a targeted blockade on ships connected to Iranian ports, not a complete shutdown of the Strait of Hormuz. Ships traveling to non Iranian ports can still pass through. That is a critical difference, and it is worth understanding before you react. As of Sunday night, here is where things stand. Dow futures down over 500 points, S&P futures down about 1.1%, Nasdaq futures down about 1.2%. Oil jumped sharply. US crude futures surged to around $104 a barrel, Brent around $101. So last week's entire rally was built on the assumption the ceasefire would hold and talks would produce a deal. That assumption is now gone. Markets are unwinding that position in real time. Oil above $100 act like a tax on every business in the economy. It pushes inflation higher. When inflation is higher, the Federal Reserve keeps interest rates higher for longer. When rates stay high, the value of future earnings, particularly for growth and tech stocks, get compressed. That is the connection between a blockade in the Middle East and your Nvidia position. It is not immediate, it plays out over weeks and months, but the direction is clear and it is worth understanding now. Gas prices nationally are already averaging around $4.12 a gallon, up significantly since the war started. The IMF warned this weekend that inflation will now take longer to come down because of this conflict. Despite everything, earnings season still starts this week, and it matters more now, not less. Goldman Sachs reports Monday, then Tuesday is the biggest single day of the year for bank earnings. JP Morgan, Citigroup, Wells Fargo, Morgan Stanley, and Bank of America all report at once. It is how to read these numbers. The headline profit figure moves the stock in the first hour. What actually matters over the next 6 months is two things. First, are consumers starting to miss credit card payments? That tells you whether the economic stress people are feeling is turning into something real. Second, what do the CEOs say about the rest of the year? In an environment this certain, forward guidance matters more than what happened last quarter. ASML reports Wednesday they make the machines that make the chips. Their order book gives you a window into future chip demand that no earnings report from a chip maker can. Watch it closely. TSMC report Thursday they already